Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 6th of April. All right, a few days out of the market for me last week and including Monday, but just coming back, just have a look what's going on because there's a bit of a conflict of US numbers and data and where the moves are going. Now, we've seen the US dollar index breaking down here. Now, I think this has got a big way to go. And you look at this, but just come back to the non-farm payrolls last Friday, right? Good Friday. Really good payroll numbers, really good employment numbers. The month-on-month average earnings was a little bit weaker. Average earnings weren't bad either. So overall, pretty good numbers. And then you come back down into the numbers yesterday. ISM numbers were very good as well, right? So we got some really good US numbers coming out. Excuse me. You'd think with that we'd see the US dollar rally, right? But the US dollar hasn't been rallying on the economic outlook. It's been rallying on the US yields, right? And it's sort of gone from sort of 91.80, almost, well, what is that, 93, well above 93, right, the dollar index. Now we've had the non-farm payrolls come out. You can see the US Treasury yields here. The prices rallying, yields falling. That's going to lead to a weaker dollar. Now, I can see here, like the move itself was at least a couple of hundred points. I think we've got to move back down here, at least down maybe the mid 91s to 92 on the dollar index. So I think we've got a bit of a way to go here before the dollar stabilizes. It's still sort of moving. And with that yield falling, right, you'd expect the equity markets to rally, which they are, right? So don't get caught up in this risk on sort of risk off profile, because we are seeing a bit of a nuance here with the markets. Now, of course, especially too, we're in the middle of the Asian session, right? So during the Asian session, the move will generally counter the previous session in North America, right? So if Euro, Sterling, Aussie have all rallied in the previous session, during Asia, they will generally fall as they take a bit of a breather, and then they come back during the European North American session again. So just understand that, right? Because when you look at the price action as it is now, yeah, equities are up. You'd expect the dollar block to be up. Well, if you have a look at the charts here, and I'll show you now, they are all up, right? And I think they're going to continue to rally aggressively, right? You got Sterling, Euro, Aussie, Kiwi, all moving up. Now, this downside move that was controlled by the increase of yields in the US Treasuries, to me, looks like it's over, right? And we're going to see a decent clean out on the dollar. Like we have started to see it already, obviously. But I think there's another 100 points at least, if not a couple of 100 points, because we've had the move up, we've had the flush out on the downside, big flush out. It makes the next move to the top side a lot easier. That's why I think we'll see Euro back to 120 in the short term, Sterling back to 140, Aussie back towards 80 cents, and Kiwi back towards 72. That sort of seems to be the most likely route for these pairs at this point in time. So just keep an eye on what's going on here, right? So if you were looking at the markets without thinking about the US Treasury yields and how important they have been for the movements in the dollar the last month or so, or 2 months, then you'd be sitting there getting long dollars, right? US dollars, because the economic numbers are bouncing. But that's not the way things are moving at the moment. So be sure about what you're doing before you jump into the markets is obviously imperative. Now from here, let's have a look with the main data coming out now. Obviously, we've come through Easter Monday, right? Thin market conditions, to say the least. Now we come into Thursday. We've got coming up the RBA interest rate decision. No change of rates expected, and you can probably say that for the next 2 years. The RBA statement, well, I don't think we're going to see much out of that either. There's no real change. What we're focusing on at the moment is the US Treasury yield. So everything else is sort of just coming in here and there. So don't get too caught up in what's going on. But we do have, the Red Book. This used to be big in the 90s, but it's sort of nothing now. We've got the Eurozone unemployment rate. I tell you what, an improved rate there sees Euro sort of pop to the top side. And then you got a bunch of, consumer inflation expectations could be a bit of a looker, and some Aussie Kiwi stuff later in the day. So not a hell of a lot to look at just at the moment, right? We've already got the lead into what's happening. The only thing that you really need to be focusing on, right, is the US Treasury yields, right? So once again, if this yield curve starts to roll over, that means the yield is falling, and you can see that by the price. That means the price is going up. Now, if you've got meta stock, right, a blue price on the Treasury bonds means a higher price. If the prices go red, well, then that means the prices are falling, the yields are increasing, and the dollar will bounce. All things being equal, this is what you have to understand, because this market can change very quickly. If the yep, I'm on the right screen. Just had to change the thing there. If these prices continue to rally, right, the US dollar is going to fall, right? That means all these the dollar block are going to rally. Now, how is the best way to approach this, right? Well, look at all these pairs, right? You get the dollar pairs at the top, the dollar block at the downside. I think these pairs are going up. So I'm looking for retracement levels, okay? Because they've already broken resistance levels, I've got to wait for them to come back towards the previous resistance level, which is now going to act as support, and get into those trades on that dip. It's like, this is very clear, right? Looking to get into euro back down here. Obviously, sterling about 60 or 80 points lower. Aussie's got a bit of a trend line coming up here. If I just quickly draw that, right, we might have a bit of a level here to work with. Okay, so back down here towards 76.25 looks like a real good level to be getting long Aussie. And same for the Kiwi. Now, I haven't deleted a lot of the old trend lines, but don't worry about that just at the moment. And Kiwi looks like at a pretty good level here as well, right? So I'm thinking these pairs we get looking to get long, okay? But we need those treasury prices to continue higher for this to work out. Getting short the dollar on any sort of particular resistance levels, a bounce back towards resistance. Dollar yen, you've got a bit of a level here. And if I can just get my pen quick enough, dollar Swiss, right? And the dollar index also has a defining resistance level here as well. If I now just clean a few of this up. Oh, the keyboard is playing up. Oh, there we are. Okay, so, and that's what we're sort of looking at, right? So looking to get short dollars, they're actually even almost dollar index back here towards 92.70. In actual fact, I'd prefer to get short at a level, give it a bit of a chance to squeeze higher. Dollar Swiss, either at this level, which is sort of breaking, or up towards 94.20, dollar yen up here. So that's the face of it. That's all things being equal. If the yields, they don't move like the currencies. They either go up or they go down, or they just drift sideways. So this is a correction, I believe, from what we've seen in the past. We should see the dollar bounce aggressively, fall, and the dollar block rally from here. It's a little bit tricky, as I was just saying, because the a lot of these pairs, right? Let me just focus in on euro. Check out this like previous support level, man. It's up towards 119.10. So when you're looking at euro, and I'm sort of suggesting this thing's going to bounce, right? So I'm looking to get into a long euro position on a dip back towards 117 sort of 70. But there's no resistance levels up here, and this is actually just prior support, which is going to be a bit loose by the time it gets there. And there's no other resistance level. So we're sort of at the moment in the middle of no man's land. So to me, you have to wait for the opportunity to build, get in at the right levels, and you may be choosing instead to get in at a support level, which could be back down here towards 117.5. Tell you what, that is a bit of a stretch to get it back down there, because the momentum, the way this thing will work is it'll go up, dips, and then goes, right? If it starts to come right back down here, well, then probably means the treasury yields are going up again, and that opportunity is gone. But I think the next 2 or 3 days, we'll see the dollar fall and all these currencies rally. That's the pick of it. And unfortunately, it's not an easy trade by any stretch, because as you can see, the resistance levels have already broken, and that was possibly yesterday. Okay, good Easter Monday. All right, guys, that's it from me. It's a bit of an interesting one. I think there's a good chance here. Not ideal in the sense that we don't have great levels, but and the dollar block, I mean, they are reacting nicely. See the US equity futures falling here, and that's leading the Asian session on a move back down with the dollar up. but with Treasury still rallying, prices rallying, I can't see. This is just a short-term fluctuation. Get ready for the dollar dip and the dollar block to rally. All right, guys, have a good trade day. Good to be back online. Cheerio.